Hi guys, what's up? I hope everybody is doing good and staying home and staying safe. Now, this is part 7 of our revision series. Yeah, and you have to excuse me for not coming live today and premiering this one because this content is something that I've recorded. And let me quickly give you this intro and then I'll add up my videos on where those standards were covered. So, what we are going to look at in today's video is a series of very interesting important standards, starting with standard number 230, which is going to be on documentation, which will then be followed by 240, which is on auditors responsibility with respect to fraud in an audit of financial statements. Then we are also going to talk about standard number 250, which is about auditors responsibility with again respect to laws and regulations. Then we have standard number 299, which talks about responsibility of joint auditors, and also the one that many of you have been asking, standard number 610, which again I pulled out from one of my past recordings, which has been explained in detail, the 610, which will be on using the work of using the work of internal auditors using the work of internal auditors. Now all these standards are relevant to both old and new syllabus, so I want you guys to make sure that you take proper care in dealing with each of this and make sure that you listen to each of those standards carefully and watch through it right now when it is premiering and not wait for some other time to do that, because generally when we tend to do that we only postpone things. So I don't want you guys to do that. Make sure that you are along with it and finish all these 5 standards. Of course, I'm not going to disappoint you. I will come live again very soon, wherein we will go ahead and discuss the exam approaches, and I will also clarify your doubts in that particular live session. So, this being the last in the revision series of part 7 that we have discussed, I also want all of you to go back to the playlist that I've arranged where the other 6 are clearly given, plus other relevant videos have also been arranged. So make sure that you make the most of it. So now let's get into the video and start off with standard number 230. What is audit documentation? Now this, again, as we go, let's start with definition only. Every time we go with definition. So now also we talk about what is audit documentation, the definition of audit documentation. Audit documentation is nothing but a record of, it's a record of audit procedures performed, record of audit procedures performed. Record of audit procedure performed, because you have to have a proof, right? So tomorrow if somebody is coming and telling you what did you do in the audit, this is what it is. Record of the audit procedures performed. Relevant audit evidences obtained. Relevant audit evidences obtained. Relevant audit evidences obtained. And most importantly, and the conclusions reached. And the conclusions reached. That's the whole point. So it's a record of audit procedures performed, relevant audit evidence is obtained, and the conclusions reached. That will decide what you have done in the audit, and you have to keep a copy of that so that it is useful for future references. So that's the first and foremost thing that I would want you to know about audit documentation, which is nothing but a record of all the audit procedures performed, relevant audit evidence is obtained, and the conclusions reached. Then going forward from here, we also need to understand why do we document. So why becoming an always an important question. The two reasons. Now audit documentation, guys, it serves two primary reasons along with 6 additional reasons. Now this is some piece that I want you to very clearly get into the understanding, because I think you should have a thorough understanding of this. The two primary reasons: one, it serves as a serves as a basis, it serves as a basis for auditors conclusion, serves as a basis for auditors conclusion. It's a very clear point, serves as a basis of the auditor's conclusion. And not just that, it's an evidence, right, that you did the audit. It's an evidence, it serves as a basis for the auditor's conclusion. And how will other people know that you did audit in accordance with standards? So therefore, again, documentation is an evidence. It's an evidence that it's an evidence that audit was planned. Audit was planned and performed. Planned and performed in accordance with SAs, right? All the SAs. It's compulsory that you do this because these two things are the fundamental reasons as to why we document. Because tomorrow somebody comes and asks you, it could be any regulatory authority, it could be an ICA asking you for clarity on doing the audit. So it serves as a great basis for you to support your conclusion. Yeah, this is the reason why I got the true and fair conclusion. This is what it is all about. So you can always be very clear about telling that. Apart from telling that as well, it's also important that it serves as an evidence that you're randomly going and telling that you've complied the audit and all that, but it's always better that you try and be very clear about what you're talking of. So you say, and your evidence serves as a very basic purpose for saying that the audit evidence was performed. Audit was performed and audit evidences were collected in accordance with the standards. So you write this as two primary reasons as to why you obtain the audit. Okay. So guys, this is one of the most asked questions from this particular topic. What is the need for documentation? Two primary, and now let's see 6 additional purposes. 1, serves, or you can say assist engagement team. Assist the engagement team. Assist whom? The engagement team to plan and perform the audit. Assist the engagement team to plan and perform the audit. Assist the engagement team to plan and perform the audit. Helps, okay, we are telling them to plan. Once they do the work, should we supervise or not? So again, the documentation helps to direct and supervise the audit. Most importantly, whoever has worked on this audit enables audit team, nobody can run away from their responsibilities, enables the audit team to be accountable for their work. Enables audit team to be accountable for their work. Nobody can run away from their responsibilities. Whatever work you do on the documentation, you will be signing on it. So enables the audit team to be accountable for their work. And the next point is a very simple one, because here you're talking about keeping this. Like, there is one of the points that says that you have to retain audit documentation for a certain period. I'm sure everybody knows it. I'll get to that, but it is nothing but a record of audit work performed. Record of audit work, which is, it can be used for future. You can say that used for record of audit work used for future. Whatever is future relevant, that one. Then remember, we studied about quality control aspects. So if we studied about the quality control aspects, who will check what in the quality control aspects? It's important for you to understand what will the quality control reviewer come and do. The quality control reviewer will also come and check what the documentation only, right? So it enables, actually 5 and 6, it does two things. Enables what? A quality control review. Enables a quality control review. And not just it enables a quality control review, it also enables external inspections. Any external inspections, it enables that also. Okay, so that's what the whole thing, guys. Here, audit documentation, it serves 2 basic and 6 additional purposes, and that's exactly what we are looking at. It's a record of all the audit procedures performed, and it serves 2 primary and 6 additional purposes. It's a very important part of our discussion, and that is exactly what we try to do and understand in documentation. Apart from this, I would also want you to let 2 more important points in this revision video about documentation. One is let's say the third point, as we discussed, assembly of audit file. When should you do the assembly? right? Assembly of audit file. If quality control reviews and all are there before even completing the audit, you will have to assemble. Otherwise, normally it's an administrative process. Administrative process, and you have to complete the entire thing within 60 days. Within 60 days from the completion of audit, or 50 days from the date of audit report, you can say that. Because see, this is just a process of putting everything together in a file and all that, but that also should not be ignored, right? So audit documentation is just an administrative process of filing everything into the files, and that should be done within 60 days from the date of signing of the audit report. And one more point that I would like to tell you is about the retention of audit documentation. I hope everybody is aware of the retention and keeping it in very clear terms. 7 years you have to retain the documentation. 7 years from the date of signing of the audit report. From the date of signing of audit report, you have to keep it for 7 long years, and it's a mandatory requirement that you keep the audit documentation for 7 years. And if there is any departure from any laws or regulations, or if you have not done something because there was a particular reason for it, and there is inconsistency with respect to audit evidences, for all these reasons you have to record the reasons and keep it. Okay, so I'm just writing all those as a departure from relevant requirement, departure from relevant requirements. Or one more point I can add up here is that there is inconsistency in audit evidences. Inconsistency in audit evidence. So all this, what you need to do is, for all this also you have to maintain documentation. Okay, it's a fairly very simple limited coverage standard, guys. Standard number 230 talks about maintaining audit documentation, and audit documentation here has spoken about maintaining a record of audit procedures performed and all that. And then this is the piece that you right now see on screen, and take a screenshot of that. That's the major part that you're talking about. 2 primary and 6 additional functions is what the audit documentation, which is one of the favorite question of the examiners from this, if it has to come for 3 or 4 marks. Now if there's a multiple choice question or a true or false question, they can always ask. They have already asked so many times that audit documentation be retained for 8 years, and that will be a false statement. They just get you confused to that books of accounts, right? So you will see, then you will immediately get a confusion in the exam. Books of accounts 8 years, or documentation, all that. So be very clear. Books of accounts are for 8 years, and audit documentation, okay, working papers, so that are maintained for 7 years from the date of signing of the audit report. Okay, so that's the whole point. And I think I can give you a small technique to remember that right now. You remember this word accounts. Accounts has 8 letters. Okay, so the word accounts has 8 letters, and that is exactly why you will retain it for 8 years. Books of accounts can be kept for 8 years, so no confusion. And since this is kept for 8 years, the only other thing that can be kept for 7 years is what? This. But there also you can have a technique. There also the word auditor has 7 letters, so auditor has to keep it for 7 years. Okay, this is 8 years, and auditor has to keep working papers for 7 years. Go by the letters. The word accounts has 8 letters, and that's why it's called that's why it's 8 years, where in books of accounts. And small techniques, guys, something to remember, right? So not to mess up in the exam, because it costs 1 mark, and it's not easy to just let go of things. So it's something that you can find out. Okay, so it's a first standard. In this part of the discussion, we have audit documentation. Now moving up, next we have standard number 240, which is a very important standard. Now 240 is on fraud. Before we talk anything about 240, I would also want to take you through a little bit about fraud, because fraud has been a separate chapter in the new syllabus. So what is discussed in fraud? Fraud as such, what is it? It's an intentional. Fraud is an intentional act. Fraud is an intentional act whereby use of deception, that is cheating, use of deception. And why do you do that? to obtain unjust or illegal advantage. To obtain an unjust or an illegal advantage. So fraud is an intentional act of using deception, that is cheating, to obtain an unjust or an illegal advantage. And because you know this, misstatement can happen because of two reasons. One of the reasons why misstatement can happen is misstatements happen because of errors. The other reason why misstatement happen is because misstatements happen because of fraud. Okay. So fraud is nothing but an intentional act. The only thing that separates fraud and error is unintentional, but whereas fraud is absolutely intentional, right? So fraud is an intentional act whereby you're using deception, that is cheating, to obtain an unjust or an illegal advantage. Now, if you ask a broader question on how does fraud happen, Fraud happens because of fraudulent financial reporting. Fraud happens because of fraudulent financial reporting. And not just that, fraud also happens because of misappropriation of assets. Misappropriation of assets. Now, if you see what exactly that means, fraudulent financial reporting talks about falsification, forgery and all that. Falsification of documents, you're talking about falsifying some documents, or forgery, changing something and it is not true and all that, forgery. And then intentional misapplication of accounting principles. Intentional misapplication of accounting principles. These are all some of the points that you need to try and understand. It's about fraudulent financial reporting, falsification, forgery and intentional misapplication of principles. And then misappropriation of assets is again broken down into misappropriation of goods, and the last but the most common kind of fraud is defalcation of cash. Wherein there is frauds like teaming and lading, suppressing cash payments and or inflating cash. Suppressing or inflating the cash, teaming and lading frauds. And I want you guys to focus on this part, teaming and lading, that alone can be a question. Let me give you an insight on a quick note. Teaming and lading is a fraud whereby what are you doing? You receive money from somebody, you're adjusting it in the name of somebody else, and then you're doing this repeatedly again till the time this keeps going, and always one person's money. Say for example, you received it from one debtor, you won't pass the entry, you'll hold on. When second debtor pays you money, you will adjust the first one. Okay, second debtor is kept open. Then when third debtor pays, that is when you do second. So this one is open. So always that one debtor's money is always with you, and it's keep going on. Before any intimation goes to the debtor, you keep doing this. So you adjust first one. When you receive, you won't pass the entry, you'll hold it. When you receive the second one, you'll adjust the first one. Then third one, then second one. Subsequently, you keep doing this, and this is exactly what is called a teaming and lading fraud. So I guess you got the insight of what fraud exactly is. Fraud is an intentional act wherein you are using deception or cheating to obtain an unjust or an illegal advantage. Fraud leads to fraudulent financial reporting and misappropriation of assets. There are two ways of doing fraud, which is talking about falsification, forgery and intentional misapplication of accounting principles. And then misappropriation of goods, wherein you see what exactly is misappropriation of goods, that also can be spoken of. And then you're talking about defalcation of cash. You know what defalcation of cash is suppressing cash receipts or inflating cash payments, or then doing teaming and lading. All these are the broader reasons for fraud. Now, why, very important question, why there is a fraud happening? Why? Because there is a incentive or pressure. Somebody is feeling a pressure, that's why they are doing a fraud. Or somebody sees some gain in doing it, so they wait for an incentive. Or somebody does it because there is an opportunity to commit fraud. And the third reason is quite amazing. You know why they're doing fraud? Because they don't feel they're doing a fraud. They've rationalized their attitude, or they rationalize their mind, saying that what they're doing is right. Okay, so attitude
or rationalization. Now this is there is nothing that I can speak about this, because he is somebody who is rationalized their mind. What I'm doing is I'm fine with it. It's not a fraud, and when they think like that, there is nothing that you can really do about it. Okay, so the incentive or pressure, there's an opportunity or attitude and rationalization, all of which can lead to quite a great damage. Okay, so that is all the reasons, the four reasons that you see as to why fraud happens. It can happen either because of an incentive or pressure, it can happen because of an opportunity, or there is somebody's attitude or rationalization which allows, their mind allows them to do that fraud and comfortably even get away with it. Now that's the best part. You do it and you don't feel that you've done something wrong. So, and there are examples under each of this which I would want you to go through, because that's one of the important parts of this story. Now let me take you through the two important parts. The standard 240, wherein you're talking about one, responsibility of management. Yes, this is very important, because the primary responsibility to prevent primary responsibility to prevent or detect and correct a fraud. Primary responsibility to prevent and detect a fraud rests with the management. We are not involved in finding out fraud. See, we are not set out here on a mission to go and find out frauds. The primary responsibility to find out a fraud is the responsibility of management. Having said that, then what is auditor's responsibility? Auditor's responsibility is during the course of the audit, 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 if at all he comes across a fraud, then auditors have to it to attention, bring it to the attention of management or TCWG. Now, please understand, you are not going on a hunting exercise to find out fraud. What is a fraud? And we will go and set out and find frauds. No, that's not your objective. What's your objective is very clear. You do the audit, but during the audit, now when, as a matter of fact, auditor should be what? He should follow professional skepticism, and I hope everybody knows what professional skepticism means, right? It's an attitude of having two things. Professional skepticism is about two things. What? A questioning mind. It's about questioning mind and being alert to conditions. Being alert to conditions. So it's very important. You have a questioning mind and you're being alert to the conditions, right? That's what professional skepticism is about. So be alert like that with respect to fraud also, because you are nowhere on a hunting exercise to go and find out frauds. Nobody has given you that responsibility also. Your responsibility still remains the same. What is that? Obtaining reasonable assurance that the financial statements are free from material misstatement, and then you give the opinion. That's it. That's your job. You are not doing anything more or less. Okay? Frauds happen, that is because of lapse of internal controls, which is the responsibility of management to set up. So primary responsibility always rests on the shoulders of management. It's not on you. You don't have to take it on your head. Got it? And after that, it is also important for you to understand that auditor's responsibility is to keep it during the course of the audit. Whatever is the fact that you have seen this, it is important for you to understand how you will be using this as part of the entire thing to drive that content. So you follow professional skepticism, you go by your audit, gather evidences, and during the process of audit, if at all there are indicators, now that is where I come to the last topic in fraud, indications of a possible fraud or a possibility, indicate the possibility of fraud. You know what this is called? Indicators of the possibility of fraud. This is called a fraud risk factor. It's called a fraud risk factor. When you say this is what fraud risk factor is all about, that's what you need to understand. Fraud risk factor is a possibility of fraud. It's not a fraud. And when you find a fraud risk factor, all that you need to do is to obtain more audit evidence. Now you have to probe into that area, because your professional skepticism reveals that there is a possibility of a fraud. Obtain more audit evidence. And but then towards the end, if auditor if auditor concludes that financial statements are not free from misstatement, that too due to fraud. Now, obviously, at this point of time, you will report to management or TCWG, report to TCWG, and based on the response, modify report as per SA 705. Things don't work out, that's what you're going to do there. Modify the report as per SA 705. I hope you got this one, guys. So it's a very quick insight of what the entire concept of fraud is all about, right? Three parts to the story that I've discussed here. First up, we talk about what is fraud. It's an intentional act of using this deception. Fraud happens because of fraudulent financial reporting and misappropriation of assets. And then fraud happens because of the four reasons as to incentive of pressure, opportunity, attitude, and rationalization. And what is management's responsibility? What is our responsibility? The concept of professional skepticism to be applied while checking for fraud, and the concept of a fraud risk factor wherein you have to obtain more audit evidence to see that it's just a possibility and not the truth. But if at all you conclude or you find that there is a possibility of a fraud and that really needs to a suspected or an actual fraud, communicated to the TCWG, and if they make corrections and take action, very good. If they don't, you might want to modify the report as per SA 705. Okay, that brings us to the conclusion of standard number 240, and the next standard that we are looking at in this series is SA-250, which is on auditor's responsibility with respect to laws and regulations. Now, at this outset, as I always start with, I need to tell you and understand that there are two types of laws and regulations. One which have a direct effect on the financial statements. Maybe like income tax laws, labor laws. There are certain laws that have a direct effect on the numbers. But there are certain laws that do not have a direct effect. They do not have a direct effect. And now that they do not have a direct effect, this is the major part of the story here. Because they do not have a direct effect on financial statement, you should not think that they're not responsible. Like, say for example, prevention of child labor. Now you're saying that as per the Child Labor Act, children are not to be employed, but on the factory premises, you found some children working. And okay, you found this. What if tomorrow some vigilance authorities find this and they put a seal to the company saying that because children are employed on the factory, let's lock this down. Now, that's a serious thing that will that will end the continuity of the firm, which is like there is a issue on going concern now. As of now, it was just spoken about as a law that has nothing to do with financial statement. But right now, the entire going concern is stopped. So all I'm saying is there are certain laws which affect the numbers, like payment of gratuity act. Compute gratuity. Payment of bonus act. Compute the bonus. Income tax act. You go for provision for tax. So all these have a direct effect on the financial statements, while there are some laws which do not have a direct effect, but they not having a direct effect, no, that could possibly lead to an indirect effect. You don't use the word indirect because not used in the standard. You say do not have a direct effect, but some way or the other they also have a effect. That's the point. So first we need to be very clear about this classification, that there are two types of laws that have a direct effect and which do not have a direct effect. Now, what are we so bothered about in this standard is non-compliance, because if they are complying with the law, nobody is having a problem. No, you just gather sufficient appropriate audit evidence to see whether they are doing that properly. Non-compliance, what do you mean by that? Whereby you're doing something contrary to the laws or regulations. If you do anything contrary to the laws or regulations, that's what leads to a non-compliance. Okay. Now, again, getting to the two most important things here: responsibility of management, and responsibility of auditor. Now guys, again the story is very simple. You need to understand how we are dealing with this, because again it is not our primary responsibility to go and make sure that somebody complies with laws and regulations. It's not our business. But having said that, I also want to make you understand that it is a responsibility of management. What is the responsibility of management? To make sure that the entity, make sure that the entity complies, to make sure that the entity complies with all applicable all applicable laws and regulations, all applicable laws and regulations. This is the part of the story here, right? So talks about non-compliance, wherein you talk about responsibility of management, wherein to make sure that entity complies with all applicable laws and regulations. Then what is the duty of the auditor? See, it is their duty to comply. Our duty is to just check, that is evaluate whether there are any non-compliances. Auditor's responsibility to obtain sufficient appropriate audit evidence that the entity has or complies with the laws and regulations. So our duty in this standard is to just to obtain sufficient appropriate audit evidences to make sure that we are not responsible. Definitely, I'm making it very clear once again, guys. Auditor is not responsible for complying. Okay, auditor is not responsible for complying the laws and regulations. That is a duty of management. Our duty is to just obtain an understanding of what are the laws applicable to them and see whether they have complied all the laws and regulations. Now for this, auditors to conduct an extensive understanding about what laws are applicable. That I can tell you, because first make a list of what laws are applicable. What is auditor's duty here? Auditor obtain a general understanding or obtain an understanding of laws and regulations applicable to the entity. It's a very important point. What are the laws and regulations applicable to the entity? Make a understanding of that, and see, then you obtain sufficient appropriate audit evidences, okay, in this regard, that they have complied. Now let's get to the major part and the conclusive part of the standard, because the standard is very simple. It talks about what laws are applicable to the entity, whether they have complied with it or not. All laws may or may not have a direct effect, that also has been discussed. Then we spoke about duty of the management and duty of the auditor. And auditor has to obtain a thorough understanding of what laws are applicable, because sometimes it may so happen that auditor, after preparing a list of all the laws applicable, he's telling the entity why you didn't comply. Entity is like, we don't know. So there can always be a possibility that management is not aware of the fact that they have to comply with the laws and regulations. I think that is going to create a problem later. Okay, so you have to obtain sufficient appropriate audit evidences in this regard, and you have to be very clear about what evidences are being collected here, and make sure that there is no non-compliance. Now, very important point: if auditor identifies or suspects any non-compliance, what are you supposed to do? First, report to TCWG. Now 9 out of 10 times we expect that TCWG should take an action. If they act upon it, just like how you saw in fraud, if you communicate to them and if they take up the action and everything is taken care of, then there is no problem at all. Just in case they don't do and non-compliance remains like that, and if the non-compliance appears to be intentional, which is like again a fraud, you might want to communicate that to the TCWG. And very important point is to consider the effect on audit report. Now what you need to understand at this point of time, when you say consider, I'll explain that consider piece here. Consider the effect on audit report is nothing but, if auditor, there are two things here. If auditor concludes, now you know this, if auditor concludes that there is non-compliance, when you use the word concludes, normally when do you use the word concludes? Only when you have evidence, right? So if auditor concludes that there is non-compliance, then he will go for qualified or adverse. Okay, then if auditor is unable to obtain sufficient appropriate audit evidences, then auditor shall go for qualified or disclaimer. Now this purely depends on the evidence, guys. This is absolute 705 SA 705, depending on what evidence you have or not. So because if you have come this far, if you're doing this, I think 705 piece is very easy, because that's the ultimate reporting part of every standard. So there I don't think you will have any problem. And lastly, you also have, if you have identified non-compliance, duty to report, duty to report to enforcement authorities. On your own, if you are going and telling, sometimes it may breach the rule of confidentiality, okay? But if it's not on the own, and if you're going and communicating to them, because you have to, it's a responsibility, so that you have to determine responsibility as per laws and regulations. That's the point. So you will determine as per laws and regulations. You will not go and simply outburst and tell whatever you're supposed to, because that's not needed all the time. So yeah, auditor should obtain an understanding of the laws and regulations applicable to the entity, obtain sufficient approved audit evidences, and if the auditor identifies or suspects any non-compliance, you report either TCWG, consider the effect on audit report, and see if there's a duty on you to communicate to the enforcement authorities. So that is what is the whole crux of 250. Okay. So 250 spoke about two types of laws which have direct effect, do not have direct effect. What are you supposed to do if you identify? What is a non-compliance? When something is contrary. And then what is the responsibility of management and auditor? And this whole piece of your reporting aspects. Right? That brings us to the last standard for this session and also this entire series is standard number 299, which is on the responsibility of joint auditors. Which is on the responsibility of joint auditors. What is the responsibility of joint auditors? First of all, who are joint auditors? Where more than one auditor, where more than one auditor is involved, in auditing the financial statements, where more than one auditor is involved in auditing the financial statements. Now that's what is something that relates to joint audit, where more than one auditor is doing the audit of same set of financial statements, then that will only be termed as a joint audit. So you need to understand when and how joint audit is to be done. First of all, joint audit, as I told you now, is done by more than one joint auditor. And very important, SA-299 does not deal with using work of auditor of a component. Using work of auditor of a component. You know what is when I speak about using the work of auditor component? Because this is dealt in standard number 600. So 299 is responsibility of joint auditors. You got nothing to do with the work of a component. Component here is about the branch, division, subsidiary, associate, and joint venture. This is what is discussed there. But the auditors of this, you can use their work, but that's discussed in standard number 600. So standard number 299 does not deal with any of that. Standard number 299 straight deals with joint auditors' responsibilities. And of course, very simple. And there are only a couple of points that I would want you to know from the standard, because this standard as such, if you see what is the crux part of the standard, each joint auditor is responsible for their own work. Each joint auditor is responsible for planning and performing their own work, and this is all very clear. So when you say joint audit, there are two things that come to somebody's mind. What is that? One is sole responsibility. Where is the joint auditor solely responsible? And where is the responsibility joint and several responsibility? Where is joint and several? This is the major part of the standard. Sole responsibility for three areas. So I can straight tell you: one, work allocated to him or work assigned to him. Okay. Two, for his own audit program. And then for all the audit documentation that he has to maintain. for all of the audit documentation. Now, this is something that definitely you need to be really concerned about, because you have a sole responsibility with respect to all these. But when you talk about joint and several responsibility, what is it with respect to joint and several responsibility? Now, if you see what is the joint and the, because for all these you are doing it, so you are responsible. One, work not divided. Work not divided. For all the work that is not divided, all you guys are responsible. Okay. And two, this is, I want you to concentrate on this point. Matters brought to knowledge of one. Matters brought to knowledge of one auditor. Matters brought to knowledge of all auditors by one, on which all agree. On which all agree. See, you guys have agreed together, right? Then you're all responsible also together. Understood? It's a very important point. No, though only one person told, why are others bothered about it and all that. So the fact is that it was brought by one, but it's, collectively responsible for everybody, because all of you have agreed. Otherwise, don't agree. Okay. So what happens if I don't agree? We will see that piece also. And for the NTE, nature, extent of audit procedures, all of you are jointly and severally responsible. And then I can add up one more thing. For all presentation and disclosure aspects, I'll reply. And then lastly, compliance of relevant statutes, all the following the standards and all that. And for audit reporting, this is the major part of the standard, guys. Rest of the part I think you can have a glance, but if this is something to be revised very well, yeah, this is the thing. One very important thing, what is joint audit, where more than one auditor is involved in doing the audit, and it does not deal with this piece. The non-applicability of the standard is also discussed. And if at all you find something where you want to communicate to the TCWG, you can do so. Now there is one very more important point which I'll be discussing in the next one, but before that, what is sole responsibility, what is joint responsibility? Are you clear with this? 3 points of sole and these 5 points are your joint responsibility. Now, very important question to the last piece of the standard, wherein we just spoke about something where a matter was brought to the knowledge of all partners, but some of them didn't agree, right? The joint auditors didn't agree. So is there a obligation that because majority people agreed, I should also agree, right? What is that happens in case of difference of opinion? This is the last but very important point. So many times it's been asked. It can be asked as a true or false. It can be asked as a short question. Difference of opinion in joint audit. Difference of opinion in joint audit. Now please understand, if there is a difference of opinion in joint audit, one, auditor are not bound by, remember very clearly, I'm writing it, not bound, all in caps, not bound by majority. They are not bound by majority. Very simple. Okay, auditors are not bound by majority. Each auditor can give a separate report. Whoever are agreeing together, they all can give a collective report. See, normally there is one report issued in the joint audit. After joint audit is over, normally one report only is issued. But if there is only difference of opinion, then they are not bound by majority. Because other two told, I should also tell, there's no rule of that sort, is what I'm trying to make it very clear. Each joint auditor can give a separate opinion. There is no rule that you're bound by any majority. Each auditor can give a separate opinion. But when you're doing this, when you're giving a separate opinion, you might care to include another matters paragraph as per SA 706. Just say that other auditors have made other reports, so you have to just care to give a other matters paragraph. Otherwise, there is nothing that stops you from doing any of these things. I hope everybody is understanding this. Auditors are not bound by majority opinion. Each auditor can give their opinion. You can give a separate report, but just make sure that there is a other matters paragraph. Standard number 610, which is talking about using the work of internal auditor. Using the work of a internal auditor. Now this is the point wherein in this particular standard you are deciding using the work of internal auditor. Now, With the amendment from 1/4/2016, this standard has taken a new phase. Like there are two parts to the standard now. This standard is not just going to talk about how to use the work of an internal auditor. The standard is also going to talk about if you can use the internal auditor for getting some work done by taking his direct assistance. By taking his direct assistance. Now, so let me take you through the two parts to the standard here. Part one is determining whether to what extent, three parts to this, determining to what extent whether and to what extent the work of internal audit function the work of internal audit function can be used. This is the first part. Okay, determining whether to use it. If at all you decide and say whether yes we can use it, to what extent, and whether the work done by internal audit is adequate or not. These 3 points you have to check. But this is part 1 to the standard. What is part 1 to the standard? Part 1 to the standard deals about determining whether to what extent the work of an internal audit function can be used. And going by the next part, here we're talking about determining whether in which areas and to what extent, determining whether in which areas and to what extent internal auditors can be used to, this time watch it carefully, provide direct assistance. Now it's a very important part. This is a new addition. Of course, it's been time right now. Not that it's very new and all that, but hardly there are any questions asked in the exam about this. So this is part 2 to the standard, and I want you guys to focus on this part 2 as well, because yeah, I understand that a standard can be asked in the exam only in terms of bits and pieces, but this less asked. Okay, they may not ask you the whole standard, but this is one of the less asked standards in the exam. They can always get back to asking it. So part 1 of this deals with using his work, which means he's already performed the work and we're just using that work. But part 2 of this particular standard deals with using the internal auditor himself for taking some kind of a direct assistance. That is, you make him do some kind of a work by taking a direct assistance. Okay. Now, part 1 and part 2, two parts to the standard. Let's go ahead and see how we are going to use these two parts to the standard. Okay, let's do this. Part 1 of the standard. I'm not reading the entire title again, guys. Part 1, I'm just saying using the work, which means he has already done the work. Okay, using the work of internal auditor. He has already done the work, and what you're doing is just using that work. In doing this, you got 3 branches to cover. One, first answering a question of whether you can use the work of internal auditor. If the answers to this question is like no, here itself you can stop doing this part of the standard, because you don't want to use the work of the internal auditor. Whether can we use the work of internal auditor? There are 2 questions here which we are supposed to ask. We will ask and see. And if the answers to those questions are yes, actually you can make it 3. Okay, whether. Then the next point is, if all these 3 are yes, like yeah, yes sir, we can rely on the work of internal auditor. So then they said whether yes, we can rely on the work of internal auditor. Then part 2 to the standard is to what extent can you rely on the work of the internal auditor? There are 4 points this time here which are subject to decide. To what extent can you be able to rely on the work of internal auditor? Whether, to what extent, and if only you decide what extent you want to rely. Now, very important question is whether the work performed by him in that area is adequate. So you'll check the adequacy. So if you're happy with the adequacy, you can comfortably go ahead and rely on that particular work, for which again there are 4 points. We will catch up now one by one. We are going to see whether to rely. First question. Now, when will you rely? If that guy is competent enough. Okay, he should be competent enough, and not just competent. He should have worked with proper care and caution. Like a simple point. If you have worked in that area, with what care and caution you would have worked, this guy also should have worked with the same care and caution. That's the idea that we are looking at. Okay, so Uh, let's go with the questions to be asked. Whether, okay, extent to which internal audit function, extent to which the internal audit function is relevant, external is relevant, and the second factor that we're talking about here is relevant, and check their objectivity, check his objectivity. So I'm taking up point number 2 after relevance and objectivity. Whether he performed his work with proper care and caution. Now, if he hasn't performed his work with proper care and caution, now before even that, to perform the work with proper care and caution, he should be of something, right? Some level that he is competent of. So, level of competence, relevant, that is relevance of his work, objectivity, level of competence, and whether he has followed a systematic and disciplined approach. Now, if the answers to all these three questions are yes, it's not like only one of them is yes. The answers to all those three questions are yes. That is, yes, the work is relevant. Whether the work is relevant, he has done it with being unbiased. Objectivity is about being unbiased, right? So yes, the work of the internal auditor is relevant and is done with it properly. That no bias is there. It's all clear. Objectivity, that being unbiased. The level of competence, the level of competence with which he has done the work, that is all pretty much fine. And whether there is a systematic and disciplined approach, in doing his work. Now, if you are confident and comfortable with these 3 points, the answer pretty much okay to this. So you can then decide the answer saying that okay, we can now rely on the work of the internal auditor. That is whether to use, the answer is yes. What to do after that is a different question. Whether, the answer is yes. Then after that we have to decide what extent. To decide what extent of the work will be used. Like you have to decide to what extent you will be using his work, right? For that you have to understand the nature and scope. That is the very first point. Nature and scope. What is the work that he did and whether that is any relevant to you, whether nature and scope of that work. To what extent, the first point that we talk about is the nature of the work performed by internal auditor and the scope. Because if his scope was limited, then you should not prefer relying on his work because that's making no sense, right? So you rely only on that where there is a proper scope for his work. So nature and scope. And then one of the most important points here, guys, you determine how much work you will rely on the internal auditor, right? But see, it should not be eventually that you use more of his work and you do less of his work. Okay, so just in one or areas. Again, I'm not deciding one or two areas, but whatever. Use less of his work, do more work directly. That's a very important point. Use less of internal auditor's work. Use less of internal auditor's work and perform more work directly. He has to do more work directly. That's a very important point. And after all this is there, no, it is very important because the end of the day, the knife is on your head only. The sole responsibility for entire audit, the external audit, is on the external auditor only. You relied on the work of internal auditor, you can't blame them. Okay, they did the work, I just relied, so it is all their mistake. Who asked you to rely? So remember, you use less of their work and perform more work directly, and always remember that sole responsibility for external audit is with external auditor only. There is no way how internal auditor is involved in this. He did the work. He didn't come and tell you, sir, please rely on my work and all that. You are relying because you want to reduce the NTE of your audit procedures. So you rely on his work because you want to reduce the NTE and not because he asked. Whatsoever be the reason, for an audit opinion being expressed, the auditor is solely responsible. Remember this point very well. They can ask you this in multiple choice, true or false. Okay. The sole responsibility for all this is always with the external auditor, And most importantly, if at all you are using the work, communicate to TCWG as per SA-260. You might want to communicate to the TCWG that in which areas you're going to use their work and what you're supposed to do with their work. You communicate the TCWG. Okay? So two parts of the standard. If you decide whether yes sir we can rely on the work of internal auditor, then you can decide to what extent. Accordingly, you can decide this extent. And now, one last thing before you wind up this particular part is the checking whether the work performed is adequate or not. Okay, see who has done this work? Internal auditor. Now, since the internal auditor did this work, it is important for you to understand whether the work performed by internal auditor is adequate or not. So, in this context, we are raising this time a few questions. First up, again, whether whether work performed by internal auditor, whether work performed by internal auditor, whether the work performed by internal auditor is all what? Planned, planned, performed, planned, performed, supervised, reviewed, and planned, performed, supervised, reviewed. Time to time it has to be reviewed. Okay, and then it is also to be documented, because tomorrow what will you look at? Huh? So whether the work performed by internal audit is properly planned, performed, supervised, reviewed, and documented. This is something that we need to get a straight arrow, right? See, you are using somebody's work, whether they did that properly. Now, if they themselves didn't do that work properly, how will you use it? So whether the work performed by internal auditor is planned, performed, supervised, reviewed, and documented. That's your first question. If the answer to that all that is yes, yes sir, it was planned, performed, and all this was gathered and all that, then only it should make sense. Then, okay, see, if it was planned, performed, documented, all that doesn't mean that internal audit would come to a proper conclusion, right? So you ask two more questions. What are those? Point number two on adequacy. What is point number two on adequacy? Whether sufficient appropriate audit evidence, whether sufficient appropriate audit evidence was obtained by, whether sufficient appropriate audit evidence was obtained by internal auditor, whether sufficient and appropriate audit evidence is obtained by internal auditor. It's always a important question to ask, because if he didn't obtain, what will you do then? Okay, and not just that, point number three says conclusions reached by internal auditor are appropriate. Very important, because if these conclusions, see, you should just ask yourself a question: if I was there in his place, whether I would have also come to the same conclusion? And if the answer to this is yes, then you can comfortably go ahead and check. So these are the questions that you are supposed to ask here, guys. Whether the performance of the internal audit is properly planned, performed, reviewed, supervised, and documented. If it was yes, that means you have enough data to work on. Whether sufficient approved audit evidence was obtained by the internal auditors, and if they obtained it, whether the conclusions reached by internal auditor are good enough. And also at this point of time, you have to consider one very, very important factor. These are 2 points that are repetitive from the first point, which is wherein you're talking about this one, objectivity and level of competence. So as part of this point number 4, to check the final point on adequacy, you have to do one very, very important check. Consider the nature and extent of his work. How will you do that? By considering judgment involved. If high judgment is involved, no, you do it directly. Don't ask them to do it. Same way, risk of material misstatement. What is assessed? If assessed risk of material misstatement is high, it's better you do it, not rely on them. And check their objectivity. Check their objectivity. And lastly, level of competence. Check their objectivity and level of competence. And most importantly, towards the end, do some work by yourself. You might have done, but you know this method, right? Re-performance of some work. They might have done it, but you do it again. I think that concludes it. Wow. So that looks perfect on screen right now. What you have is part 1 to the standard, and this is so clear. We have 3 questions to ask: whether, to what extent, and adequacy. Guys, this content is roughly 2 pages in your material, and that's been summarized on your screen right now. Absolutely. So if you can remember all these key terms, I think that itself is more than enough for you to remember this for the exam. And if they ask you, even if they ask you in the exam, this is what you're supposed to write. So there are no new things that you actually have to do. Whether, to what extent, and adequacy are the three factors that one needs to consider. I hope everybody has got clarity till here, because that's one last part that is pending for this standard and this particular revision session, which is part 2 to the standard. Part 2. What is part 2 to the standard? Part 2 is using internal auditors direct assistance. Using internal auditors direct assistance. Now here also, very importantly, if you are talking about taking direct assistance of the internal auditor, how will you do that is the question, right? Let's talk about that. Same thing, whether, and then determine the nature and extent. Okay, so let's go with the three parts here. Whether can you take the what do you say, direct assistance of the internal auditor? Okay, same point guys, but one of the points that you have to keep in mind is whether it should not be prohibited by, I mean, like you can say, if not prohibited by law or regulation. If it's not prohibited by law or regulation, not prohibited by law or regulation, then what is it you can do? If it's not prohibited by law or regulation, you can comfortably rely, subject to checking, subject to checking again the two things. One, which is called the objectivity of the internal auditor, and two, level of competence. Now, it's a very important factor, guys, because if he is not competent, what will you talk about? So, level of competence. Sorry, yeah. So that goes there very clearly. So you're talking about whether to use the work of the internal auditor, part 1 of the standard. Part 2, whether to use the internal auditor himself for a direct assistance. And if the answer to that is yes, that can be yes only if it is first not prohibited by law. If law says you can't use the work of internal auditor, as of now there is no law which says that, but if there is any law that says you can't use the work of internal auditor, then definitely you might want to not use it up. But otherwise, wherein it's all saying that you can go ahead and use it, you need to understand that you can use it subject to these conditions: checking objectivity and the level of competence. Then moving up to part 2 of the standard, which is talking about the nature and scope. Now if you remember, we got to talk about the same 4 points that we discussed there. Which one? The judgment involved, risk of misstatement, understanding the level of competence and objectivity. They are same 4 factors. Okay, so the same 4 factors. So to determine the nature and scope in the areas, factors to be considered, I'm going to again tell you the same 4 factors. Wherein now let's talk about some of the points here. One, again, objectivity and level of competence, both are factors. Objectivity and level of competence. Level of competence. Judgment involved. Judgment involved. Assessed risk of material misstatement. Assessed risk of material misstatement. The assessed RMM is high, then you don't take their direct assistance, you involve and you do it, which is a very basic and obvious need, right? So objectivity, level of competence, judgment involved, and assessed risk of material misstatement. Now, one of the most important points, the area where you are taking their direct assistance, okay, should not be from the areas where internal auditor has already been involved. Internal auditor has already been involved. If he has already done some work there and reported to management, you can't take that. Okay, so objectivity and level of competence are factors we check. Judgment involved, if it's a high judgment is involved in that, then you do it. If the assessed risk of material misstatement is high, then also you will be doing it, and then it should definitely be from one of those areas where he has not done previously. Now, if you believe that he has done that previously, then there is no point taking his lessons doing it again. It's a self-review thread. Okay, and then while taking or using direct assistance,
we have to do two things, guys. Very important. This also towards the end, because these are two things that you have to supposedly do. One, okay, take, what do you say? A written agreement. Take written agreement. Take written agreement from an authorized representative of management. Take written agreement from an authorized representative of management, saying what, that internal auditors will be allowed, internal auditor will be allowed, internal auditor will be allowed to follow external auditor, and management will not intervene, because they should not poke their nose now, right? So take it in writing from somebody from the management, saying that yeah, they will not step into this and they will not intervene in any of these matters, right? Take a written agreement from authorized representative of management that they will not involve into the work that internal auditor is doing as a direct assistance to the external auditor. So it's absolutely between the internal auditor and the external auditor, and we have to very clearly ask the management not to involve or intervene into this. And plus, see, you as an external auditor are always bound by the rule of confidentiality, right? Now, you also have to take or make an agreement with internal auditor, agreement with internal auditor, that he will keep confidential, that he will keep confidential, he will keep confidential all matters that he saw during the audit, all of that will be kept confidential. You will take it. Very important, because see, you are not supposed to open your mouth because you are bound by rule of confidentiality. But you are like, I mean, he is like, I am internal auditor, so I can open. No, because he can't talk on behalf of you. Hey, this is what I did for the external auditor and all. He can't go and tell outside. Okay, so you bind him by the agreement, and make sure that you document both these. One copy of the agreement you will take it from. Management, saying that they will not intervene in their work, and two, one agreement you will take from the internal auditor saying that he will not intervene into the, I mean, he will not declare anything outside, and he will keep confidential all the matters that he came across during the course of the audit. So guys, this standard as such, if you want to look at the overview, standard number 610 is broken down in two parts. One, using the work performed by internal auditor, and two, areas where providing direct assistance. So for both, there are conditions that are there. This is pretty much extensively written right on your screen. Take screenshots of part 1 and part 2 and run through the whole of it. So that brings us to end of another session, wherein we have discussed three wide, varied, important concepts. One on audit risk, section 138 on applicability of internal audit and who will do the internal audit, and if the external auditor wants to use the work of an internal auditor, what all are certain things that he is supposed to